So you're a financial planner with Edward Jones.
Yeah, I'm with Edward Jones. I've been in the industry for 13 years now, and I love it. I'm just a complete like nerd for everything finance. Right now, I'm currently I have all kinds of mentors. I mean, Chris is one of my mentors too. He helps me out with a lot of things because of his extensive experience with estate planning, and so that works hand in hand with financial planning. So I utilize him and his guidance a lot, but another person I recently started being mentored by was a guy who does like fund structuring and manages hedge funds. So I like to just, it's not, financial planning is just one component of finance, of the holistic piece of finance, but I love to learn it all. So I guess in short, that's what I'm trying to say. I'm very passionate about the industry and like learning more. I feel like I'm always a student in this role, honestly. But yeah.
What have you learned with the funds? Like, how is that different than financial planning? Like,
Well, for the fund world is really interesting because it's structuring a fund for a purpose. So, for example, the two guys actually that I'm working with, or that I'm being kind of mentored by, they have a private equity firm, and they structure funds for different purposes or for different types of projects. So, one of the just to give you an example, one of the funds right now that they currently are working is a crypto fund. It's a guy who, he's developed this fund. It's comprised solely of cryptocurrency and then AI technology, some
oh
AI
wow,
technology as well.
that's
Yeah,
awesome.
and so he follows the trends of, he's very like technical, like the technical and fundamental analysis of the cryptocurrency world. And so he's
Mhm.
been following the trend of Bitcoin. And yeah, anyways, he's put together this fund based on all of his research. So he's primarily investing in Ethereum and Solana, if you guys are familiar with
Yeah,
crypto.
yeah. Just
Yeah,
started buying Solana. I wish I would have bought it earlier, but have a little bit of Bitcoin and Ethereum, but I don't have a ton. I lost actually thousands, but
yeah,
I,
yeah.
I I had mine in like one of those online wallets where they give you interest, and they ended up sending out emails that I guess I missed. I wasn't paying attention and said, I don't know, there's some law about they had to close down. And so like I had like 10,000 or so that I lost. I couldn't even access and still can't to this day. So I just call it a loss, I guess. So
Oh my
that's
God.
that's kind of like the risk, I guess, with the cryptos is you have to really stay aware of what's going on and not be stupid like me. And but I feel it's a great way of the future. So I don't know. What are your thoughts on it? It looks like
Yeah.
you're a fan of it.
I mean, I love crypto. Like my company wouldn't like me saying that, but like honestly, I like I love it because I studied blockchain application development, and I was kind of in the midst of learning how to like develop my own cryptocurrency exchange, which a lot of people are doing, which is
Mm,
why there's a lot of like scams and stuff out there
yeah,
because you can basically, yeah, do it. But it's so intriguing to me. It's so interesting, and just like the way that we're starting to utilize it, it's just like at the beginning, you know what I mean? Like I don't know. I love learning all about it. It's just so
yeah.
unique.
I
Um,
remember asking about it in like 2010 before like anyone ever heard about it. And I was trying to find people that knew something about it. I'm like, hey, what do you guys think of this Bitcoin? I just couldn't find anyone. And it sucks because if I would have found the right person, I would have said, yeah, man, invest in it. And this is how, maybe I could have been sitting on millions of dollars, but that didn't happen.
I know. Oh my God. My best friend that I grew up with, I went and visited her. This is funny. I went and visited her in 2013, like the end of 2013. And the guy she was dating at the time, he was talking about, he's like, yeah, I'm getting into, he was doing all kinds of stuff. And he was trying to talking about this like crypto stuff. And we were kind of like, whatever. And he talked her into, he's like, just, it's a good investment, like let's put some money into it. So she put like $1,000 at that time, and it turned into like $500,000 or something
Oh,
crazy. Like,
crazy.
and he actually put way more. So he's now like a multimillionaire and does
That's
work. He's
awesome.
completely like living his life.
Yeah.
But the financial advisor in me is like, kind of like, he's so concentrated in Bitcoin. Like it's just his whole position is Bitcoin. And he's like got
Yeah.
millions of dollars in it. So I'm like, now you've amassed this wealth, so you should diversify a little bit. But whatever, he won't listen to me.
Yeah, maybe
He's
that's
like,
not a bad
yeah,
idea.
he's like all into the trends and all into like the Bitcoin halvings. I don't know if you guys have heard of the Bitcoin halvings events. So basically, I think don't quote me on how many years, but it's like every so many years the Bitcoins have these what they're called halving events. And so when these happen, in short, the people who hold Bitcoin tend to like double whatever they have held. I can't explain it, or I can't articulate it much more than that, but that's like the general kind of like what happens. And so there was so he's just like riding high, because this has happened like I think 4 times maybe since Bitcoin's inception. And so he's just like been riding this and just increasing. And he's just like, whatever, I'm never gonna be out of Bitcoin. Yeah. So
I definitely want to diversify more into Bitcoin. I need to start focusing on it again. I just kind of like what I'm willing to lose, I kind of throw in it. And
yeah.
when, back before the crash, I was doing that and then, lost a bunch, but I don't want to fear investing in it again, just because honestly, it was my fault. I should have been paying more attention and pulled my money out and put it into one of my, hard wallets or whatever, and just kept it in there.
Oh, I was going to ask you. So that's what happened. You had your money on an exchange.
Yeah.
Yeah, a
I
lot of
won't
people.
name the exchange just because this will go on the internet, so I don't want to go there. But
Yeah,
we can talk about that offline another time.
yeah. Oh my
There's
God.
actually two exchanges. One actually gave me a little bit of money back because they were in a lawsuit, and then so they had to give like a portion of it back, and then the other it just disappeared. So,
Oh my
but
God.
on my defense, I had a lot happen in 2002 that kind of took me out of the game for a bit of just private stuff that happened. So I just wasn't really paying attention. So things happen in life.
So I have a question, because I am a crypto. I don't know that much about it. My assumption was you were better off holding it with an exchange, because I guess if you have it in your own hard wallet and you lose the key or whatever it is, that you're out of luck.
Well, yeah.
Go ahead. Yeah, if you want to go ahead and answer, because you went
You
through
know more about it than I do, so go for it.
you went through it, so you probably know. But no, in short, I mean, yeah, like if you don't know the code, or if you don't remember the key to it, I don't know I'm blanking on the word of what they call that, but like then you can't. I mean, yeah, you can't access the funds, I don't believe. But if you have it on an exchange, what happened to Brandon, like people weren't knowing that you trade on the exchange, and then you leave. What happens is you have a sum of funds on the exchange where you're trading and you're investing, and which sounds like what Brandon was doing. And then what you need to do is pull it off into the hard wallet. But if you leave it on the exchange, then it leaves it vulnerable for hackers to hack into it. So a lot of people are experiencing that happening, because it's on. If it's out there, it's out there. Yeah.
What liability or responsibility does the exchange have for maintaining their system so that they're not being hacked?
Yeah, see, I don't know. And Brandon, maybe you know the answer to this, because I think it was happening more early on.
For me, it wasn't a hack. It was like U.S. laws or something happened where the one company, you can actually access them outside the United States, but they just shut it down, and they said, pull your money out. We're going to be shutting down by this time. You won't be able to have access to your money. And again, I just didn't see the emails. I wasn't paying attention. And the other one, I think, went bankrupt after some different things passed. So it wasn't even hackers, but there are hacks that do happen a lot. With the hard wallets, you just print that key out, and I put it in a safe so I won't lose it. And yeah, I mean, you got to be smart. You know, it's just like if I have gold in a safe as well. And, I'm not going to lose that either. So,
when the exchange just says, okay, we're shutting down in the United States, and you don't withdraw your Bitcoin, what happens to it?
I lost it. I don't know. I don't know who gets it. Do you know?
I think they take it. I think
it sounds like they're stealing your money, man.
Yeah, I think because this.
I feel like they did. I don't know.
I feel like they did because there was this whole war with like the government. I mean, I feel like Bitcoin is now kind of like coming into like where the governments are utilizing it a little bit more, but in the beginning they were not, right? So they were not a fan of Bitcoin. So I would imagine maybe, I don't know. I don't know.
Yeah, I mean, they can't really control it like they want to, and I don't know. Maybe they're able to access little more control, so they're starting to let it roll out a little bit more. I don't know. I love the fact that, no government oversight with a monetary system. I think that would be great for humanity in the future. That's why, everybody is so pro, Bitcoin. I don't know if Bitcoin's the tool for that. Maybe Solana, I don't know. But, I know there's, a lot of experts out there, and I'm definitely not one of them.
Yeah, I know. It's like an endless, and it's still developing things about crypto and stuff. So
yeah, and even in like the mortgage world, where it took us a while to be able to utilize that money to buy a property. So I mean, you still have to exchange it out, but with mortgage, you have to have seasoned funds. So you cash it out, put it in a bank account, and now certain banks are allowing us to show, hey, it's from crypto and here it is. So then that would be considered seasoned. But it's still a very slow process, to even be able to utilize that. Because I've had some clients, who attempt to buy properties with Bitcoin, and it was, there's some challenges. I even had a realtor come to me and ask if they could just send the money straight into escrow. And so I found them an escrow that accepted Bitcoin. So, it's a slightly different world. Obviously as the lender, I wouldn't have anything involved in that, but an escrow would have to take it and then convert it into money and pay off whatever liens are on the property and then cash out to the seller. So yeah, it's kind of interesting. I mean, I know you, Chris, were talking about you could buy property. I don't know. It was something with having to do with buying property and Bitcoin and stuff.
Yeah, when I started
NFT.
learning about NFTs, the first property sale, I think it was in Ukraine. And the NFT was designed such that whoever won, it was like at auction, whoever satisfied the minimum bid and won the auction, the NFT would transfer the interest in a Wyoming limited liability company to them. And so the owner of the LLC was whoever owned the NFT, and the LLC owned I think it was like an apartment building or condominium or something, right? And so that was the first NFT real estate transaction. And then I read that they try to duplicate that on a property in Westlake Village, but nobody ever hit the minimum transaction amount. And so the auction expired without a sale taking place.
Okay.
But NFTs are interesting.
Seems like people are trying to do different new things, but it's hard when you do that because people are clueless, and they just, a lot of times it's hard to think outside the box and say, how do we make this thing work? When you're doing something completely different, you have realtors that have been doing it for 30, 20 years, whatever, and used to doing business their old way. And instead of adapting, but we do have to adapt. The future is coming and things are changing.
Yeah, I mean, the big problem of using an NFT for real estate is that you limit your market, because that's a relatively small number of people that are going to be willing to do that.
Yeah. I mean, I would imagine it would be just on a luxury home or something, a multi-million-dollar home, because someone buying a $500,000 home is probably not going to be savvy enough to even be involved in something like that.
So yeah, I think there's a novelty aspect to it. But I've heard some examples of ideas, that you could you really make money on a smaller scale. And the one idea I heard was from Gary V. Was like, he said, if I have Gary's Pizza, I could issue a number of NFT tokens that would say, let's say 1,000 of them that would give you 10% off of a pizza for as long as you own the NFT. And then maybe 10 of them that you get free pizza for life, as long as you own the NFT.
Huh.
And then you have the ability to sell your NFT. So let's say you move out of the area, you're not going to Gary's Pizza anymore. You could sell your NFT, but the way the NFT is written is that the issuer of the NFT would get a royalty or a commission every time that transaction takes place. And so you have this ongoing revenue stream, so that every time someone sells their lifetime pizza token, you get a cut. So kind of like that idea. And a client that they're really into NFTs and Bitcoin and all this stuff, and we had some interesting conversations about it. And I still have no idea how to actually make an NFT, so we'll have to figure that out, I guess.
Do you know much about those, Liz?
I was actually, now that this conversation is happening, it's like reminding me I need to go back to like studying all this stuff, because I'm always, buying courses and stuff. And I did. And what part of the course that I purchased was developing your own NFT. And and so you learn how to do that. And then as far as like real estate transactions, I mean, I don't know, like a lot of people have feelings on NFTs that, they're like pointless or whatever. But I just feel like they're gonna be something, because like to Chris's
will be, and
eventually.
And I get the feeling that they're pointless, because when they started blowing up, it was all these little digital pictures of monkeys and stuff.
Yeah, and I think that's what people think. Like they're just like, these like memes or whatever.
It's basically a digital contract that self-executes, so it eliminates the need for escrow.
Exactly. So, yeah. For real estate,
what you do is.
Well, I mean, a lot of people probably wouldn't like that, because it probably would eliminate agents too, and the mortgage brokers as well. So, I mean, do it. Make some changes, do some things different. We all have to adapt to whatever that is. But
so, if you're a real estate, firm right now, you probably should learn about NFTs, because that would be a service offering you could provide it. We've got this real estate NFT game down, and you want to use us, and then you write the NFT so that every time the house sells, you get your commission.
You get a commission. Yeah, exactly.
That's actually smart. I like that.
Yeah, but it's true. I mean, because with the utilization of smart contracts, smart contracts are basically code written, and they're immediate. It's an immediate transaction. It's immediately there. It's all transparent. It's on the blockchain. So there's 100%, authenticity with the contract. It's immediate, and it's not, 30 days of waiting for escrow, like this, that, and the other. It's like this immediate transaction. So I'm curious, like now that we're saying this, because real estate companies should be getting, it's just kind of like an obvious thing to, because then you would have such an advantage with the market of these speedy real estate transactions.
Yeah. Now you're giving me some ideas.
Yeah, see, there you go.
See, I've thought about it.
We're talking about Bitcoin and NFTs on this call, so this is cool.
Yeah,
the way I think I would do it is I would set up a limited liability company, and they would be, in that LLC would be the recipient of all of the residuals from the smart contract NFT setup, and that would be in perpetuity. because if that product, whether it's a house or whatever, keeps transferring hands under that smart contract, those royalties are going to keep getting paid out. So you need to have a digital wallet somewhere to receive them.
Mm-hmm.
And I think the way to do it is the owner of the digital wallet's the limited liability company, or it could be a trust. And in that way, you can leave that to your beneficiaries, your kids, whatever, and that thing just keeps rolling in.
So you're saying as the property gets transferred to different owners, there's a commission that goes to that wallet. Is that kind of what you're saying?
Yeah. My understanding is that you can program the smart contract so that as additional transactions take place, a residual comes back to you.
That's kind of cool.
Or to wherever you program it to.
That's really cool. Nice.
I think we're on to something. I think that
I know, right?
like this is this could make us a lot of money and also generate
company.
wealth. Yeah, for our families, like this.
Seriously.
Yeah, but no, I mean it's a really interesting concept, and like you said, we're just like the beginning of it, and it's to your point, Brandon. I just think like a lot of people, they're not very comfortable with it, and it's just so out there that because you're talking about like NFTs, which is essentially property selling and buying property in the metaverse. Like we're not even doing it on this on Earth. Yeah. We're doing it out in the in the ethers now. So it's a hard concept, but it can be done, and there are benefits to it. So,
and I try to figure out what the benefit of that is. I guess I'm not enough of a gamer to really get it, but some of the examples where like you have these virtual worlds that people go into and have whatever experiences they have, and some of the examples where there could be a billboard where you can place your advertising, and sell it if you want to.
I was hearing a lot about that stuff a couple of years ago, but now I don't really hear people talking about that. So I don't know if like the metaverse just kind of faded away, the novelty of it, or what. But
I think
people are buying land for hundreds of thousands of dollars, and in the metaverse. I think somebody like Snoop Dogg or something had like his land, the property next to his, or something. I don't know if it was him, something like that. I could be wrong.
I think what happens is these new technologies come along, and they're kind of at an infant stage, and everybody's like, this is really cool stuff. Let's brainstorm and figure out how to make it viable.
Yeah. And
so people keep coming up with ideas. One of the ideas I heard was some of these multi-player online games, the way they monetize things is you can play for free, but if you want to get like upgraded whatever's, upgraded spaceships or weapons or whatever it is, you have to pay for that. And what that's been a credit card transaction or PayPal or something like that. But then let's say you buy like the bigger, better gun and you don't like it. Well, too bad. You bought it, it's yours, it's in your account. And with a NFT based system, you could create a third-party marketplace where if someone wants to get rid of some of their stuff that they bought for the game, they could sell it on the third-party marketplace, but the game maker gets a commission every time a transaction takes place. So the more churn there is, the more revenue goes back to the game maker.
Okay. Yeah.
Smart. Yeah. Cool. Really interesting.
And I mean, I'm not, I'm not that guy who like sees the future and and gets it all right. But my impression so far is that the whole smart contract NFT game is on the back end, getting that residual.
Yeah, that makes sense for sure.
Yeah.
So I'm sure you're not investing in Bitcoin at Edward Jones. So tell me a little bit about
So,
the
yeah.
financial advising part, and I'd love to know kind of what somebody that doesn't own a home, how you would invest for them versus somebody that does own a home. What you would do different, and how to maybe help somebody that's looking in the next year or two that wants to buy a home, and what would be the best strategy for that.
Yeah. So in terms of someone who wants to buy a home, definitely using financial planning software and doing a robust financial plan for their family kind of shows, because what I believe is, and what most financial advisors believe, is that if there's no intention or purpose behind the money, there's really no point, because a lot of people will come to financial advisors saying, like, how do I make money? Like, what do I need to do? What's the latest it's like, it's not really about that. At least, from a financial advising perspective, what it's about is like, what do you want for your life? And so it's almost like you're controlling your own destiny, not having the market dictate your destiny. And I think that's where a lot of people get confused. So if someone came to me and is like, I want to buy a home, and that's their dream, we put it into their financial plan and we say, okay, how much money are you making right now? What's your current situation? And then, how soon do you want to buy a home? And we have software that kind of projects, is based on your current situation and what you're doing. Are you going to reach your goal of buying a home in 1 year, 2 years, whatever? And so, and so you reverse engineering that. And that's pretty typical of what someone would do. And then that'll dictate to me as a financial advisor and to the client about, what changes do they need to make in terms of like earning income, or what do they need to do? And then for me, okay, how aggressively do they need to invest, or how do I need to set aside funds? Is it a long-term goal? Is it a short-term goal of buying a house? Something like that. Yeah. And then for someone that's not, renting, for renting a home, and Chris and I have talked about this strategy. It's kind of like a strategy that we borrowed from Grant Cardone, because I'm doing the Grant Cardone training. But especially with, if you're someone who's a small business owner, entrepreneur type, renting is definitely, advised over buying. One of the things that I think, and that I've learned, is that, if you're going to be buying a property, do it as an investment into like a multifamily. It's like something that's going to generate cash flow and passive income for you. And don't worry about, you want to focus on your business and focus on that. So for someone that's renting, I mean, I work with a lot of people who would fall in this category, small businesses, athletes, small business owners and athletes and entertainers. And so I'm always advising them, because a lot of people, I mean, the American dream is to buy a home. And I'm like, well, wait a minute, like, look at what you're doing. You're not a W-2 employee. You're not following this structure. So here's a different piece of advice on how you can, own something, but
yeah.
Yeah.
So I've heard Grant Cardone say that many a times, like, don't own your home. And what I'm assuming is he means don't buy the home you live in, rent, because you can rent cheaper, and then buy an investment property that's going to generate income.
Exactly.
Which totally
so his rule, or one of his rules, is that you don't increase your lifestyle from your earned income.
Yeah.
Yes.
And in that you want to take most of your earned income and set that aside for investment.
Mm-hmm.
And
now, I mean, I look at it, I don't know. I mean, I guess it kind of depends on what it would cost to rent. Like, if I was to rent my house right now, I would be probably paying $4,500, and my mortgage is only like $3,600. So I'm in a win-win situation. And I didn't put a big lump sum down on buying my property. I put actually less than 5% down, because I made commissions being in the business. Plus I made real estate commissions and mortgage commissions. So basically I got into my house for free. So,
there's always
and no matter what, I have to live somewhere. And if I'm going to pay rent, I might as well pay rent to myself and actually be, gaining equity while I'm doing that, because, you know, my house I bought for 630, now it's worth like 950. So I made out, I bought right before COVID. So I was very lucky. You know, so I mean, in my situation, I feel like I made the right decision 1,000,000%. And, you know, that's kind of what I kind of look at for my clients, you know. I don't know, you know, correct me if I'm wrong.
Yeah.
I think it depends. You know, I mean, if the numbers work, the numbers work.
Yeah.
The concept is, so, you know, this is kind of the scenario that, you know, I experienced when I was like in my 30s was, you get married and it's like you have a kid on the way, and it's no longer cool to live in, you know, whatever part of town. So you follow the common advice, and you plunk down a chunk of money and buy a house, and now you got a mortgage, and now your weekends are spent mowing lawns and doing yard work, and, you know, keeping up with the maintenance on the house, and you have to replace the hot water here, you know, something else goes out, and then you say, well, you know, we got to buy furniture for the house, and we want to put hardwood floors in, and so you're like in this constant state of watching your money either get locked into equity that you can't use, or get spent on stuff, you know, related to home ownership.
Yeah, to keep the house up to date,
Right.
or what have you. Things happen. Where if you rent, you could have the landlord fix the toilet, fix the plumbing, whatever.
Yeah, you don't have to do anything.
It's easier. Yeah, I get
turnkey
that.
operation. You don't have any responsibilities for maintaining the property.
Yeah.
Someone else is doing that. You can take all that spare time, focus it on your quote side hustle, and over time build up a portfolio.
I mean, yeah, especially, you know, I would say if you're young, you know, buy a rental house first. Don't live with your parents, buy a rental house, you know.
Yeah.
If you have a family, maybe you have to reevaluate that. It could be the same, you know, buy a rental house, make sure you're renting a place that your family will fit in, but it's a lot less than what your mortgage would be right now. But definitely buy and generate an income for yourself. Eventually you'll be able to buy the house that you'll
do so much better. And if you're like a 20-year-old single person, you can rent a room in a house with some of your buddies.
Yeah.
Right? You can keep your expenses down. But when you buy an investment property, a single family home, how are you going to make money on your home? Capital appreciation and debt pay down. And over time, you know, you'll do okay. But if you buy an investment property, you not only have capital appreciation and debt pay down, that debt pay down is accomplished through the cash flow, you know, from the tenants. So they're doing it for you.
Yeah.
And then you have depreciation, which is a huge deduction.
Yeah.
And so you can multiply that, whereas you can't scale home ownership.
So I've had clients buy, younger clients, of course, buy a property, then rent out rooms. They basically live in that property for free because their roommates are now paying the rent. Do you think what do you think would be a better way? Rent a different place, buy a property, rent that out, get the depreciation, or live in it and rent out the rooms? What would you advise? What would both of you guys advise?
What would you say?
If you're young and focused, I'd say make yourself as small as possible in terms of your financial footprint. So if that means you're buying let's say a house, and let's say a 4-bedroom house near a college campus, and you put locks on all the doors to the bedrooms so everybody has their privacy, and you rent out the individual units, and maybe you can generate enough from 3 of the bedrooms that you can live in the 4th bedroom for little or no rent.
Yeah.
I'd suggest taking the smallest bedroom in the house.
But doing that, you wouldn't get the depreciation write-off, right?
No. Well, I don't know. That's
one disadvantage, maybe.
Yeah. You know, it's like you said, you know, if you could live with your parents, do that for a while.
Well, yeah.
And
but not everybody has that ability.
Right. And the idea is that you let the cash flow as you acquire these assets, you let the cash flow improve your life.
Mm-hmm.
So once you have adequate cash flow, that the cash flow will now pay for your own home. Great. And
Exactly.
maybe you start out buying
Yeah.
a townhouse and then you continue increasing your cash flow. And now the cash flow is adequate where you can use that to turn the townhouse into a rental, or maybe you sell it and then you go buy your single family home.
Mm-hmm. Well, I'm a big advocate of house hacking. Basically, you buy maybe a duplex, a triplex, you live in it for a year, you move out of it, go buy a new place, and say you're going and live in that one for maybe a year, and then you move out of that, rent it. And the reason that it's an advantage to live in it for a little bit is because you're going to get a way better loan when you buy a house as
Right.
owner occupied. So you don't have to put as much down as an investment. You're still going to have to put 20% down. But if you're living in it, you can do either 0 to 5% down, depending on what route you take. There are some, no money down programs, depending on your situation. But if you can get into a house and, get a pretty decent rate,
Yeah.
a little bit out of pocket, and then you move out of it. Depending on the route you take, you don't have to live in it for a year either, maybe 6 months. Depends on what the bank, bank says they're going to allow. So,
and the other way, you go about this is you raise capital through syndication or, other means.
Well, I've never been able to raise money through syndication in my life. I'd love to know how to do that, but that seems way above my pay grade. So.
Well, I think
it sounds good in theory. I'm not going to condone, though. I don't have thousands of people begging.
You need a reputation, right? So you need to get some deals done. So if you want to, play in, let's say, the multifamily space, buying apartment buildings, you need to buy a couple apartment buildings. And
yeah, absolutely. That'd be amazing.
As you develop a reputation as being a player in that space, there's a lot of people out there that like the idea of investing in multifamily. They just don't want to do it. They don't want to do the work, but they're more than happy.
Yeah, none of that's easy. It takes a lot of tenacity and negotiating and finding. I work with every now and then. I'll work with a buddy of mine, Joe. He owns a company called Real Success. They do seminars teaching people how to buy investment properties, and now they're doing multifamily as well. So those are great strategies to gain.
But the way it happens is you have some successful deals, and then some people who know you say, well, gee, Brandon, if when you get another deal, if you need some money, let me know, because I'd be interested in investing.
Yeah,
and then. Kind of the word gets out over time, and next thing you know is people are lining up wanting to invest with you.
With a little success behind your belt, people are going to want to hop on that bandwagon, right?
Yeah, with right now Cardone Capital, they're buying some really big multifamily properties for cash.
Yeah.
And that's because there's enough people wanting to invest. That
as a financial advisor, sorry, Chris, I just had as a financial advisor, do you recommend to your clients buying real estate as well, or are you just putting more money in like mutual funds, things like that? So everything.
Everything. I'm not like, a lot of my colleagues, sometimes it's like, in any brokerage firm, like I've been in the industry 13 years. It's like sometimes they're just like sticking you to thinking in this like limited scope of like what investments are offered at the firm. But no, I mean, you do have people that are interested in real estate, and a lot of time you can't really argue with the returns on real estate. And so if people are happy doing it, and especially if people are happy either being property managers or hiring property and going that route and building that, I definitely like recommend that, and I'll put that as part of their financial plan and as part of like their investments, and do the projections in that way. And I think it's like, it's great. I think to the point of this conversation, I think going back, I think what's really hard to break, and I'm from the Midwest. I grew up in Cleveland, so I've only been in LA for like 3 years, but the majority of the population of the United States lies in the Midwest. And so I always think of that as being kind of like the mindset. And I think it's just like that dream of owning your own home. And to Chris's point, I think it's breaking that conditioning. I think of a lot of people, even on the West Coast, you know, and I'm sure you run into this all the time where it's like, you know, telling people to own the home, like thinking of different strategies, like, okay, like you don't need this, because a lot of people are just running into trouble in terms of, you know, buying a home, and you think like this is it, and you think I've achieved the American dream. I'm married, I have kids, and I buy a home, and then it's like the next thing you know, all your money's gone into this house, and
I know so many people over the years that, you know, they become slave to the home, to the car, to all the things that they bought, and they're stressed out, and they're trying to like maintain the lifestyle, and you know, they put themselves in the corner where they can't really make any moves, because every month those bills need to get paid again. So they're just hustling, trying to keep the bills paid.
And it's a culture in the Midwest. I mean, like where I came from, it was like people, that's what you do. You go into the office, or you go out to a party or wherever. And it's like, people just talk about that. And that's just like the norm. I mean, it's just like, oh, you know, I had to, you know, mow the lawn or whatever. Oh, another expense. And I had the plumber come. And it's just like, it's this normal, it's so normalized into the culture. And it's like, it's almost to the point of like, what else are people going to talk about? And I've gotten to the point where it's like, I think this is so conditioned in people's minds, because they don't know what else they would discuss. They didn't have this, you know, talk about.
It's like a
I don't
shared
own a home, so I have nothing to talk to you guys about.
Like, I have.
It's like the shared stress and anxiety. It's just, you know, my septic tank it needs to be replaced, and your friend's like, oh, that's nothing. I have to take down this 1,000-year-old tree, and because it's about to fall on the house, and then it's always something. Hail damage.
Oh my gosh.
Meanwhile, the guy renting the place doesn't care about any of that stuff.
It doesn't care about anything. Yeah, he's not talking about anything. Nobody's gonna like have these conversations of, oh, you know, my property manager is taking care of that. My cash flow is like this number, this month. You know what I mean? Like my lifestyle's being so like it's not this positive.
If you want to just kind of be a baller about it, you know, you rent the the apartment and turn a dedicated space into your office. Now you got a home office deduction, so now you can offset a little bit of the rental cost, and nowadays you can run a business from anywhere as long as you have internet. You know, we're all sitting at our homes and just broadcasting, online. So it's
I have an office, but I don't go in there.
I
work from my house.
But you can, if you're young and you got that energy, this is the best time to do it. Maybe you get the W-2 job, but then you run a side hustle. And if you're smart about the side hustle, you put it in the same vertical as what you're doing for the W-2. And then the way I'd set it up is, your foundation is always going to be the living trust, but then you could set up the limited liability company for the side hustle. And I would just leave it as a disregarded entity. Everything goes on your 1040 until the income increases adequately. And then you sit down with your tax guy and you do the numbers and figure out whether it's time to take that S corporation election. And then slowly your side hustle becomes your main hustle. And the money that you're earning from that side hustle, that gets set aside. You live off your W-2 paycheck. Everything else goes into like a holding account until you're ready to buy your real estate or whatever investment it's going to be. But over time, that monthly cash flow, passive cash flow, that starts snowballing and building up, and you can use that to fuel further investment.
Right.
All right. And then by the time you're, let's say, in your 30s and you've got adequate cash flow, then you can think about doing things like buying a house, getting married, having kids, all that kind of jazz.
Yeah, and then you don't have to worry, and the stress is kind of gone. You've taken the right steps. You've generated, like you said, the adequate amount of cash flow that you need to sustain your lifestyle. And then that's really the pathway to ultimate financial freedom, in my opinion.
Right.
But, and
Yeah.
to doing what you love in life. I mean, not just financial freedom. It's like literally creating something like a business or whatever you want to put out into the world versus working for someone else and then going home complaining to your wife and your kids about it. And then, you know what I mean? And then having that whole energy being put out, which is a lot of energy that people experience. Right. And so
you stop enjoying life.
Yeah.
Because you're so stressed that you don't want to spend money anymore on enjoyable things like taking a trip, going on vacation, whatever makes you happy.
Right.
And your energy is all invested in this anxiety and worry about how am I going to pay my bills this month.
Right. And it's really sad because, it's really sad. So it's like more than just the money. I think a lot of people will look at this and say like, oh, okay, it's just somebody that just cares about money. So, I mean, some people would think that, not all, but it's a little bit more than that. It's about, actually being happy and enjoying your life and doing what you want to do. It's a hard path. I mean, it's not easy. It's not easy to work a W.
Well, they're both hard.
Yeah, they're both, but it's like choose your hard, right? Like they say.
Right. The biggest challenge with going that alternative way is you have to listen to the comments and ridicule of your friends who are all buying houses. Right.
Yeah.
Like, oh, you're not building up equity, and you're just making the landlord rich and all that kind of stuff, right?
Yeah, but
those people you just need to cut out of your circle.
If they're buying as investment, though, that's that's
different. Yeah,
that's different. So it's like, I may be renting, but I'm buying to be an investor, to be the landlord, to now I'm collecting the dollar. I feel like though a lot of people are maybe afraid of being a landlord because they're afraid of getting a bad tenant and some people not paying.
Yeah, when you get into larger properties, though, you don't have to be the landlord. You just hire a property manager to do it. And,
True,
you just own the building.
Yeah, and I know that's why like Grant Cardone talks a lot about like multifamily, like 18 plus or something like that. Where
I think
you have to have a
breakdown
property
is
manager, right?
At 100 units, you can afford a full-time property manager. Someone
you would create the company, not hire one. You would own the company, right?
You could create your own property management company, sure.
Yeah.
But the larger the project, the more revenue there is, and you can allocate the cost of property management across more units.
Mm-hmm.
So if you got 100 doors, each paying, let's say $2,000 a month, that's a good chunk of money that you can probably fit in property management. I wouldn't want to, be a hands-on landlord.
Yeah, I mean, even if owning a single family, rental, especially like out of state, you're going to have a property manager. So.
But I think what you're recommending, Brandon, to your clients, I mean, because somebody listening to this might think like, okay, I can't just jump into like buying a commercial multifamily unit. But I think your strategy is great for someone thinking like, okay, how do I get into this and what do I do? Like living in the house, like you said, and having the ability to make less of a down payment, up front versus like, okay, buying an investment property right off rip, and living in it and then renting out a room or something if you're young is a nice way to get a feel for that, because then you would be living in the home and then you'd also be experiencing, okay, this is all the upkeep that has to go into it. Once you experience that, you may be like, I either like this or I don't, or this is why people want to, and then kind of like go from there. But I think that's a great strategy for people that are thinking about getting started. You know, in investing, in property. And it's great because I just think a lot of people just like I was saying, a lot of people jump the gun and just want to be homeowners. And it's like, no, hold up. Like it really makes sense,
Some of the folks that I see who take to this real well are combat veterans because they've been shot at which is more scary than buying real estate. And they're used to sleeping in bad places like foxholes and on the ground and, in the wet. So having a room at your buddy's house doesn't seem so bad.
Yeah, and if you're a veteran, I mean, you could buy a $3 million fourplex with no money out of your pocket, which is insane. You could even build a property with no money out of your pocket as a veteran, which is cool. We have loans that you can do that too. So it's pretty. The veterans have a lot of capability there that they may not even know exists for them. So.
Yeah, that's true. Actually, when I sold my house in Ohio, I sold to a veteran, and he had this like veterans loan and put nothing down and had this like great deal. Like, man, this is cool. Really
exactly.
Cool.
I mean, and that's like the prime example too. Let's say you do end up just buying a single family and not a fourplex or something like that. You live in that for a year and then move out. You got a house, no money out of pocket, and then now you do it to the next one.
Mm-hmm.
So those are great strategies if you just don't have the money to put down, or you don't have the resources for syndication. Your name's not Grant Cardone.
Yeah.
Right. The way you start is you get a couple of your buddies, right? It's like, let's go buy an apartment building together, and everyone throws in something. And
yeah. I mean, again, each buddy's still going to have at least 50 to 100, So not everybody has that. What do you do if you got no money? If you're starting from scratch, you just want to hey, I want to buy real estate. Where do I start?
Right. Well, you're going to have to do something to generate earned income. So you're either going to
start saving, start a business. You invest. Like, let's say I was in that situation. I'm getting started in life. I would eventually want to own, if it's investment properties, real estate, whatever it may be. But I don't really have a savings or anything. I would obviously either be self-employed and create income, or have a job, whatever. And then I would start putting money aside to buy a property. Would you invest that money, or would you put it in the bank?
Well, I'd probably put it in a money market fund.
While you're building it. Yeah.
While you're building it, like a money market, something that's guaranteed.
The bank's no good because they're not going to pay you anything. And right now, inflation is going to erode your money while it sits there. Mm-hmm. So I'd want to get some yield.
Yeah.
And so I'd probably be looking at a money market.
Do you think like a index fund or something is still too risky to put money into?
I mean, I would think so, because I think me personally, it's not like horrible, but if you're thinking of somebody started from scratch and just wanting to buy a property right away, I would just say put as much money as you can into a 5%. Like right now, the money market funds are around 5%. Put it in there, and then as soon as we get that, it's going to generate the yield, and then let's throw it into a down payment on a property. And then
the problem with an index fund is if you want to buy a house next week, or next month, you don't know what the market's going to do in 30 days.
Yeah.
Right? You might lose 20%.
Yeah. I mean, especially now Warren Buffett just pulled a bunch of his money out of Apple or something. And, there's a reason why I'm assuming that he's pulling a lot of money out of stock.
Right.
Things are getting ready to maybe go in a negative direction. I don't know. I'm not smart enough to know that. But
we're headed into an election, right? So, and there's a lot of uncertainty out there. And if you've made good money on some stock investments, maybe you start taking some profits.
True. Yeah.
Mm-hmm. But you have to have a plan for it. It's
you don't take your profit out without putting it into something else, right?
Right. So you need to do something, so you're not you don't want idle cash.
Mm-hmm.
And so you got to put it somewhere.
And you also have to pay taxes when you take your profits, right?
If it's a non-tax deferred account, sure.
Yeah.
But one of the things you can do is you can use an IRA and set it up as a self-directed.
Yeah.
And use that money for funding investments.
Yeah, exactly. I have a client doing that. It's a different kind of loan. They're not very easy, but
Well,
It's
not everything is going to be easy,
for
right?
sure. But yeah, nothing's easy. It's a great strategy. He's had good success doing it. I think you have to put like a minimum 25% down, which obviously comes from your self-directed IRA. And then you're looking at a non-recourse loan, which are far and few between to find the banks that do that. But, he ended up finding the right banks. He was buying them, I think, in Idaho or Ohio. I think Ohio, actually. And yeah, I mean, he's had great success with that. I definitely recommend that,
Yeah. I had a client ask me about a self-directed IRA. I think that's a good route to go because he's completely into like alternative investments. He was a guy that he pulled out all his money from Edward Jones and is like, he sold his businesses like, I'm going into crypto and real estate. And like, I was like, oh man, like, so then he's asking about self-directed IRAs. But yeah, I mean, to your point, it is like this volatile election year. And I think interest rates are set to go up, right? So that's going to have this inverse relationship.
Actually, rates they're saying are going to start coming down.
Coming down. Yeah.
So I think by at least next year we're going to see slightly better rates. They're saying though September the Feds may start lowering rates, which doesn't directly tie to mortgage rates, but it indirectly does. So once the Feds start lowering rates, it will. You'll see mortgage rates follow, and obviously interest rates, the prime rate, credit cards, all of that are directly tied to that. So they'll follow that as well. HELOCs as well. So hopefully we thought they were going to come down in May, and they just weren't seeing the negative inflation numbers that they were expecting. So,
gotcha. And you're saying mortgage rates won't go down or be affected?
No, they will. They'll follow. Yeah, I just said they weren't directly. They're not tied to the Fed funds rate, but they do follow it.
They follow it.
So,
Yeah, because I was seeing, he sold his Apple stock, but like the direction is to kind of, at least what I've been hearing is to increase your equity exposure because rates are expected to go down. So I said that wrong. Not rates going up, but rates going down. To increase the equity. They have that inverse relationship, but
exactly. Yeah.
Interesting. But if only we had a crystal ball to know.
Yeah, that would be amazing. We'd all be rich, And
we have to come up with that. We came up with an NFT idea. Now we have to come up with.
Yeah. I'm gonna have to start racking my brain on that. That sounds pretty good.
Yeah, especially for real estate, for sure. Awesome.
Cool, man. Well, thank you, Liz, for taking your time. We actually went a little longer than I expected. Normally do about a half an hour, 40 minutes or so. So we were on for about an hour. But this was awesome. It was fun.
Yeah, this was awesome. Thank you guys for having me. I really appreciate it. It was, we went over, but it was like good conversation. So it was great. I hope you guys have me again. We can talk about more stuff.
Yeah, absolutely. For sure.
Yeah.